The ongoing conflicts between Israel and Palestine, as well as between Russia and Ukraine, have far-reaching implications for the global economy. How do these regional disputes ripple through international markets and affect everyday lives around the world? Let's explore these impacts in detail, breaking down complex concepts into understandable terms. Energy markets, the backbone of modern economies. Energy is the lifeblood of modern economies, powering industries, transportation, and homes. The Russia-Ukraine conflict has dramatically disrupted global energy markets. Russia, one of the world's largest producers of oil and natural gas, has found its exports restricted by international sanctions. These sanctions are essentially penalties imposed by other countries to pressure Russia into changing its actions. When such a major supplier faces restrictions, it leads to a decrease in the supply of energy resources, which in turn causes prices to spike. Consider this. When gasoline prices rise, it affects not just individual drivers, but also businesses that rely on transportation, such as delivery services and airlines. These increased costs often trickle down to consumers, making goods and services more expensive. This is a classic example of inflation, where the cost of living increases as the prices of goods and services rise. The volatility in energy prices creates uncertainty, making it difficult for businesses to plan for the future, potentially slowing economic growth. Food security, the global breadbasket under siege. Food security refers to the availability of food and individuals' access to it. Ukraine, often dubbed the breadbasket of Europe, plays a crucial role in global agriculture, particularly in the export of grains like wheat and corn. The conflict has severely disrupted farming activities and export routes, leading to a significant reduction in grain supplies on the global market. Imagine a household budget where a large portion is spent on groceries. If food prices rise due to shortages, families might have to cut back on other essentials, such as healthcare or education. This situation is even more dire in regions like the Middle East and Africa, where many countries rely heavily on Ukrainian grain imports. When these supplies are cut off or reduced, it can lead to food shortages and increase the risk of hunger and malnutrition. Financial markets, the pulse of economic confidence. Financial markets are where investments are made in stocks, bonds, and other assets. They are sensitive to geopolitical tensions because uncertainty makes investors nervous. When conflicts like those in Ukraine and Israel escalate, investors often pull their money out of riskier markets and instead invest in safer options, such as government bonds or precious metals like gold. This shift can lead to fluctuations in stock markets, affecting the value of investments and retirement savings. For example, if a major company based in a conflict region sees its stock price drop, it could impact not only the company's ability to raise funds, but also the broader market sentiment. This lack of confidence can slow down business investments and hiring, potentially leading to slower economic growth. Global trade, the arteries of international commerce. Global trade involves the exchange of goods and services across international borders. The conflicts have added strain to already stressed global supply chains, which were recovering from disruptions caused by the COVID-19 pandemic. Supply chains are the networks that move products from manufacturers to consumers. Disruptions in these chains can cause delays and increased costs, as alternative routes or suppliers must be found. Consider the production of a smartphone. It involves components sourced from multiple countries. If one of these components is delayed due to conflict-related trade disruptions, it can halt the entire production process. This not only affects the manufacturer, but also the consumer, who might face higher prices or product shortages. Economic growth, the ripple effect of conflict. Economic growth is a measure of how much more a country produces in goods and services compared to a previous period. The combined effects of rising energy prices, disrupted food supplies, and unstable financial markets can slow down this growth. When economies grow slowly, it can lead to higher unemployment and lower income levels, affecting people's quality of life. For instance, if a country spends more on importing expensive energy and food, it might have less to invest in infrastructure or education. This can hamper long-term development and reduce opportunities for its citizens. In severe cases, prolonged economic stagnation can lead to recessions, where economies shrink instead of grow, leading to widespread economic hardship. Conclusion: navigating the stormy seas of global conflict. In summary, The conflicts between Israel and Palestine and Russia and Ukraine are not isolated events but rather significant disruptors of the global economic landscape. They impact everything from the cost of filling up a gas tank to the price of bread on grocery store shelves. Understanding these